and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics of the day and the biggest moves in the stock market. It is presented with comedic common sense and just the right amount of sarcasm by an expert in financial literacy. And hey, that's me, Larry Steinhouse. Today is October 13th. Hey, I want to welcome you to the show. We are here live on Facebook, Twitter, LinkedIn, and YouTube. And you can also find repeats of the show on Rumble and Spotify. Hey, please search Money Chat Now and Larry Steinhouse, and then you can follow me there as well. Hey, if you'd like to connect, please go to contactlarry.com. That's contactlarry.com, and there you will find my social media connections, my email, and my text message information as well. That's contactlarry.com. Hey, just a reminder, if you're watching online, hit that like button, hit that share button, and don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. You can also find Money Chat Now and the Larry Steinhouse Show on Spotify, so please go there and subscribe as well. Hey, don't forget, you can comment live during the show on YouTube, Facebook, LinkedIn, and Twitter, and please say hi so I know you're watching. If you don't say hi, I don't know you're watching. Hey, if you haven't joined the Money Chat Now fan page on Facebook, please do that. That way, when I'm on Facebook jail, you can certainly still watch the show. So please go to the Money Chat Now page, like it, and you'll never miss a show. Do the Facebook censors. All right, real quick, I want to say hello to a couple of people joining us online. Boy, lots of people joining us so far. I love it. I love it. I love it. We got Charles. We got my wife, Linda. We've got Jose coming in from YouTube. We got Tommy. We got John, Bill, and Charles. Charles and Charles. No, Charles and Charles and Charles. Yeah, that's fine. All right. Anyway, we've got coming up, we're talking about the market recap, yesterday's market recap, and what's going to go on today. We're talking about mortgage deficiencies, truth censored again, and we're going to be talking about AMC Troubles. All right, Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class this Thursday by going to investorschooling.com, and there you will learn about real estate investing and stock options trading from those who do it every day. Hey, that's today. Today's Thursday. Hey, if you haven't come out to a class, you want to come out tonight, I promise you it'll be a great class. Hey, I want to thank a whole bunch of people for sharing the page the last few days. I always appreciate it. A whole bunch of you guys are doing that. Please share it. Please continue to share it. I think Barbara and Betsy and Peter and Ken and even my wife, Linda. Thank you, Linda. You guys all shared it. So everybody out there sharing it, please share it. I appreciate that. Let's talk about yesterday. Well, it looks like it was just another average day in the market yesterday. Nothing exciting happened when the Dow started out higher and then moved down to close about 28 points. The S&P also closed down about 11, and the NASDAQ also about 11. The big news yesterday was the release of the Fed minutes. This is the briefing before the big news of another interest rate hike. The report says that Federal Reserve officials have been surprised at the pace of inflation and indicated at the meeting that they expect higher interest rates to remain in place until prices come down. So we're basically going to beat you to death until we fix the problem. Okay. It is apparent that inflation is certainly a problem. The problem to me is that we're just moving the inflation problem from the consumer pricing to interest rates. In other words, the prices of items may level off or even come down in price. However, the cost to purchase those items on credit is going up every time the Fed raises the interest rates. When you double the interest rate for loans, especially for loans that are already in place, you put a bigger strain on homeowners than the price of the homes themselves. But, I like I've been saying, this is above my pay grade, so why should these guys consider listening to me? What we need is a good recession to stop inflation. Yep, I said it. We need a good recession to stop inflation. No, I don't want it to happen. But because these guys can't see the trees through the forest, they're just going to continue to inflict pain until they feel satisfied that they stopped the inflation problem that they caused in the first place. The Fed basically caused this problem by acting too slowly over the past decade. Interest rates should have been where they are now when we entered the scamdemic. A slight reduction would have been possible. That way, they could have done a slight reduction instead of the 0% rate that we had for about 2 years. It's too bad I didn't know how to become a Fed chair or a chairman. I would have loved to sit in these meetings and tell these idiots how to do it right. What a mess they created. The meeting notes also discussed how they felt that a lot of the inflation was due to supply chain problems. So it's the old supply and demand once again. If you have high demand and low supply, people will overpay to get their items, such as cars and homes. This problem is definitely going away. If you remember, I did a report on the fact that car dealers are in for a shock now that they have a large supply of cars, and the buyers are falling off because of the higher interest rates. and of course the fear of recession. Here's something that was tucked away in the minutes that's a bit tough. So this was tucked away. Right now, the Fed interest rate, the rate that the Fed lends to the banks, is about 3.25%. I expected it to go to 4, and I've mentioned it in previous reports. Tucked away in the minutes, I read how to find it. The Fed actually wants to go to 4.5 or 4.75 before they stop. So that means that if they're lending the banks money at 4.75%, you should expect interest rates or mortgages to be about 3.5% higher than that rate, or interest rates for housing to be between 8 and 8.5% sometime next year. So if you think interest rates are high now, just wait till next year. That will surely crash the housing market. All right, today we also have the consumer price index report being released in less than an hour. The market is bracing for 8:30 when the CPI report will hopefully tell us that inflation is dropping. But will it? Every month we feel the pain of the prices increase, but we live with it. Right now, people are still buying and paying higher prices because they have credit available, and they're using that instead. Excluding, of course, food and energy, the CPI is expected to have actually risen 0.4%, which is down from 0.6% in August, but the annual rate of core inflation will still be 6.5%, and it's expected to top the 6.3% in August. So they're actually expecting it to go up. I don't get it, but whatever. We're looking for these numbers or less. Hopefully they'll be less. Last month we saw the numbers higher than expected, and that started the downfall. I believe the market dropped over 1,000 points that day. Here's a possible problem with this month's report. Housing costs and rent continue to rise, and that could cause the CPI to bounce up. We know that energy costs have decreased, even though they're increasing again, but this report is based on September's numbers, which means that the lowest cost for energy and gas will be factored in. Guess what will be the next problem? Hurricane Ian. Yep, Hurricane Ian may create havoc for inflation control. Prices in some categories could be affected by the hurricane as Floridians replace the destroyed cars and rebuild homes. That could drive up the cost of building materials, new and used car prices, as well as the cost of everything from appliances to home furnishings. So supply and demand will start all over again. Of course, we'll have great employment numbers, and that's another problem. The country has unemployment rate of about 3.5%, which is excellent. There's also more job openings than people are willing to take. This is causing salaries to rise and companies to battle for employees and offer them higher salaries to retain or acquire talent. So this week we have earnings season kicking off tomorrow, actually kicked off this morning, and we have the CPI report today. We have stocks beaten down to ridiculous lows, and we have the fear of a recession. This is a perfect storm to either make a lot of money today or lose a lot of money today. Good luck, but here are the futures. And let's see if they're an indicator of what the money managers are expecting. So let's take the first look at the futures and see what Wall Street has in store for us. Right now, it looks like the futures are up 303. That's pretty good, I got to tell you. It's going to all change in about an hour. We have the S&P up 33, and we have the NASDAQ up 76. So that's pretty good. All right, let me just say hello to a couple people real quick. What? Oh, my nose is, okay, I got it. All right, I'm just looking at some of the comments over here. So we got James coming in, and Mark, and Tom, my brother Seth, and we got Michael, and we got Rob, and of course, we've got Rob again. So James, this is what I was laughing at. So James from YouTube, he's saying, your nose is not brown enough, so you don't qualify to be the Fed chairman. Yeah, I kind of agree with that. All right, let's talk about mortgages. Hey, look, we know it's coming. We know a recession is coming despite the spin from the White House and the out-of-touch politicians like Pelosi and Biden. We know it's coming. As I discussed earlier, mortgage rates are skyrocketing. By the way, I wonder if online mortgage company, remember the online mortgage company that called themselves Rocket Mortgage? I wonder if they're beginning to rethink that idea. Well, anyway, mortgage rates are rising, and it's getting harder to qualify for mortgages as banks fear the recession and fear the foreclosure numbers rising in the future. But how are we doing now? Are there currently more foreclosures or less? So during the great scamdemic, we had, of course, that mortgage deferment, which allowed millions of homeowners to not pay their mortgages for an extended period of time. The borrowers are now back to paying their mortgage payments, and some were even told that they had to repay the back due amount all in one lump sum or risk delinquency. By the way, that was why I suggested that this was going to be a bad idea to take that deferment. I can't believe those banks did that. Anyway, now that we have the mortgage payments being made and some people screaming over the fact that they had to take money from savings or even their 401k to catch up on their payments, how is that affecting delinquencies? Well, according to a company called Black Knight, which is a mortgage software analytics company, mortgage delinquencies at the moment sit near record lows. That's right, record lows. So while new foreclosure auctions rose about 15% from July to August, they were also still 44% low or below pre-pandemic levels. So right now, the problem isn't here yet. Is it coming? Oh, most certainly it will. But here's the real problem that most aren't talking about. The problem is how negative the equity in recent home purchases. So people have negative equity in recent home purchases. The people who bought their homes in the past 2 years paid record highs for these homes. Now that the prices are calming down, they also owe more money than the property is worth. Now, when this happened in 2008 and 2011, many just stopped paying on their homes, knowing it would take years to catch back up to the prices they paid. This was part of the problem that led to so many foreclosures at that time. Look, basically what happened was many of the banks just let the people live in the homes years before taking action. The foreclosure problem is coming, but it isn't here yet. Remember that economic trouble indicators often lags reality. So be prepared for it. By the way, you should learn how to solve the problem by buying the houses of people who are stuck in mortgages that they no longer want. You could actually buy the house and use their existing loan to finance the purchase. It's a little tricky and you need to learn how to do it. But of course, if you come to Investor Schooling, I'm going to teach you how to do it. All right, listen, you can find out more about watching this commercial.
Okay, so you thought about buying and selling real estate. You've thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask one of your burning questions to the stock options sultan, the master of picks and plays. Call 866-424-2829 for free information and receive a complimentary pass to attend classes, or register online at investorschooling.com. Don't delay. These passes are limited. So what are you waiting for? Call 866-424-2829. That's 866-424-2829. Or visit investorschooling.com. That's investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on Investor Schooling, you can go to investorschooling.com or call 866-424-2829. Hey, look, I'm hoping to see you guys here tonight. Call 866-424-2829 or go to investorschooling.com. I want to welcome you back to the show. We're here live on Facebook, Twitter, LinkedIn, and YouTube, and you can also find repeats of the show on Rumble and Spotify. Hey, please search Money Chat Now and Larry Steinhouse on Spotify. Like and subscribe there. Hey, if you'd like to connect with me, please go to contactlarry.com. That's contactlarry.com, and you can connect with me. You can find my social media connections, my email, my text message information. That's contactlarry.com. All right, a couple other people joined us. Looks like Art joined us and Tom joined us. Thanks so much. I appreciate you guys watching. Rob also says creative real estate deals, here we come. He is absolutely right. So if you don't know how to do them, come see me. I'll teach you how to do them, but I'm going to teach you, telling you, the real estate market for real estate investors is going to open up, and it's going to open up really, really well. All right, so far we've been talking about the market recap. Just to give you quick numbers, the Dow is up 323, the S&P is up 35, and the NASDAQ is up 85. We're going to have to see what the CPI report does to that. It might be a really, really good day. All right, we also talked about mortgage delinquencies, and they're not bad. Matter of fact, they're way down. So it may not be a problem, at least not yet. Coming up, we have Truth Censored again and AMC Troubles, and of course, today's picks and plays. But did you guys hit that like button yet? Did you guys hit that share button yet? Everybody hit the share button. Come on, everybody scroll down, hit that share button, and also leave me a comment to say hi if you haven't already, and leave me a comment to remind, just as a reminder, is the only way I know you're watching. Please share and like as well. Don't forget to order my new book. It's called Money Hacks. And if you ordered it, please leave a review on Amazon. All right, let's talk a little bit about the app Truth Social. Hey, you remember this? It was supposed to be an alternative to Twitter, allowing free speech to reign once again. Well, users of the app would no longer be scared to publish their God-given opinions, and free speech might actually exist somewhere on the internet. Well, it turns out that the internet itself is controlled by just a few players, and these players like Google, Amazon, and Microsoft have complete control over whatever they want to control in an app or a website. As you know, I've been put in Facebook jail, and I've had my YouTube accounts closed, and one of my emails is permanently banned from YouTube. Why? Because I had the notion to express my opinion about masks and the vaccine. YouTube literally closed my YouTube access to my main account. By the way, I can't even watch YouTube videos from this account. It's banned completely. They don't even let me watch a movie. Luckily, I had other YouTube accounts, and that's why some of you can still watch this show today. Anyway, getting back to Truth Social. This app was supposed to have little or no censorship. It was supposed to be what social media was 10 years ago, when you could express yourself any way that you desired. Well, Google decided to ban Truth Social from its app store called the Play Store. Basically, Google had decided that they don't want you to have free speech in an app, and if Truth Social wants to be listed there, they have to abide by the ever-changing fascist rules of the mother company Alphabet. Anyone remember reading Animal Farm when the rules just kept changing? Well, that's basically what's happening now. Well, now that a handful of companies control everything on the internet, in order for you to be allowed to download Truth Social with the hopes of free speech, Truth Social had to change their free speech policy to abide by Alphabet's free speech policy, or should I say non-free speech policy. Yesterday, Truth Social was added to the Play Store, but Truth Social is being watched carefully to abide by the rules laid down by the governing powers of Alphabet. What a crock. Hey, Elon, would you freaking buy Twitter already and bring back free speech to social media? I wonder how long this is going to play out. Anyway, the stock of Digital World Acquisitions Company, the holding company for Truth Social, jumped when the announcement was made yesterday. The stock with the symbol DWAC has taken a beating this year, along with many other social media companies. But DWAC was as high as 175 in the past 52 weeks, and now it trades at about 10% of that number at about 17. Look, I have an account there. I have an account at Truth Social, but personally, I got to be honest with you, it's a boring site. It only has Trump this and Trump that. It's kind of boring. I mean, it's fun to read, but, a little variety would make it more fun. I actually don't see the company or app surviving unless that happens. So, yeah, it is what it is, especially with the vendetta Google, Amazon, and other social media companies have against Trump. So, Truth Social probably won't last, but unfortunately, that's not Trump's fault. That's not Truth Social's fault. That's the fault of Amazon and Google. All right, real quick, couple of people saying hi, too. We got Tom saying hi, and Glenn, thanks so much, guys. I appreciate you guys. And don't forget to share it. Everybody hit that share button. All right, let's get into AMC. Hey, you guys remember during the scamdemic, entertainment companies like AMC theaters almost shut down and went bankrupt? AMC was hit pretty hard when their stock dropped as low as $1.30 a share. But just so you know, before the great scamdemic, the stock hovered comfortably in the 10 to 11 range. Well, when the meme stock craze hit AMC, they were caught up in a momentum, and the stock went to some crazy numbers and was as high as 36. So imagine buying the stock at $1.30 and then selling it a few months later for 36. That would have been awesome. Anyway, as the meme stock craze ended, because the kids in the basement of their mom's house needed to go back to work, the stock dropped and then dropped again. All right, some who were crazy enough to buy this in the 30s are still waiting for it to come back. Well, folks, Bitcoin will hit 50,000 before AMC will hit 40. So this ain't happening. Neither one is happening. The company is struggling with sales once again as blockbuster movies are scarce again. Look, some movies are even being released on paid subscription services the same day they open in theaters. I don't know if you saw this movie, the Halloween movie is going to be released on Paramount and the theater at the same time. Nobody's going to go watch it. So that's also becoming a problem. Look, if I can watch the movie in my pajamas in the comfort of my house, I'd much rather do that than drive to the theater to see it. Theaters in the past have struggled to make money on the actual movie, and of course, they decided concession sales are the best way to make profits. Like the $10 tub of popcorn. But the theater doesn't have, if they don't have a movie to bring the people in, they aren't selling popcorn to anyone at any price. Anyway, for now, AMC has enough cash in hand to survive and operate for the next several years. Then this was said by Eric Handler. He's a media and entertainment analyst at MKM Partners. So as of June 30th, AMC had available liquidity of more than 1.17 billion. Look, its shares slump, he added, is purely about the capital structure. However, the company continues to bleed money, and at $6 a share, they still might be overpriced, is what he said. AMC took a risk last year and bought a gold mine. No, really. They bought an actual gold mine. What? They took some of their capital and added an asset to the company, and the gold mine company that AMC has about 22% ownership in was a failing gold mine that AMC believes that they can recover it and make them some money. I'm wondering if there's going to be a documentary on how AMC went out of business because they bought a gold mine. I actually wonder if it'll be the last film that AMC plays in its theater. My guess is that the recession is coming and all the subscription entertainment services and theaters will be smaller and smaller and more gimmicky to attract patrons in different ways. I wouldn't be surprised if a drive-in theater doesn't make a comeback in some way or another. You know, look, we've seen other ideas such as the seats folding down into beds or table service in a theater. I like theaters, but, you know, I hate it when the guy I sit next to, and it happens every time, has to explain the movie to his girlfriend while I'm trying to watch the movie. Shh. All right, we have to take a break here. I'll see you guys in a minute, and we'll be back with some picks and plays. Hi, I'm Larry Steinhouse, and one of the most misunderstood things in America is money. That's why I've written this book. It's called Money Hacks, because everything you think you know about money is wrong. And I'm telling you, everything you think you know about money is wrong. When you read this book, you will learn things about money that you did not know. You will even learn if money can buy you happiness. I have a full chapter dedicated to that. You're going to definitely want to read that. I talk about how to use other people's money to buy real estate. I talk about how to save more money, and I even talk about how to rebuild your credit score in this book. There are 22 amazing chapters in this book. This book is now available everywhere. It's available on Amazon. It's available on barnesandnoble.com. And you can order this book right now, and you'll have it in 2 days, and you'll start learning things about money that you never knew before. So order the book right now. Go to Amazon, go to barnesandnoble.com, and order the book, Money Hacks by Larry Steinhouse. All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. By the way, would you like to be a sponsor on the show? Come on now. Somebody reach out to me, be a sponsor on the show. Your name and product will be delivered to hundreds of loyal listeners and watchers of the show. Hey, as you know, we're expanding our base every day. Excuse me. And if you'd like to get your product or service out to my audience and help keep the show in the air, I'd love to have you as a sponsor. Just reach out to me in Messenger or contact me at contactlarry.com. That's contactlarry.com. And of course, as you know, we also have a Spotify channel. That's right, you can subscribe to the channel and listen to all the reports. They're broken out for your enjoyment. Look up Money Chat Now on Spotify. And of course, you can subscribe there as well. So a couple of people online are going, hey, where's Ken the Democrat? I have no idea. It looks like we have the other two trolls aren't here either. So it must be a non-trolling day. Maybe Thursdays are non-trolling days. Who knows? All right, so right now, just so you know, the futures are up about 290. The S&P is up 33, and the Nasdaq is up 76. We talked about mortgage delinquencies. We talked about the fact that they're really not that bad right now. We talked about Truth Social is being censored again. Unbelievable. There's the end of that. And then we talked about AMC Troubles. Most likely that theater is going to be closing down. Probably not tomorrow, but in a couple of years. All right, coming up, we also have today's picks and plays. But did you guys hit that like button? Come on, hit that share button. Everybody hit that share button. Tell all your friends about the show. Let them know it's both entertaining and educational. And please share it on your page or in groups that you feel will also enjoy the show. All right, so today is going to be all determined in about a half an hour when the CPI report is, of course, announced. Hey, as I've said I said this every time, every month, you don't even need to receive the report. Just look at your screen for the market futures to change at exactly 8:30. They will definitely change. It will be a big swing up or down. I would say about 400 points up or 400 points down. And that's basically where the market's going to open after the report. It's either going to open at 400 points up or 400 points down. Investors need some good news, and maybe it'll bring it. By the way, I got to tell you, I still like my favorites like Meta. I know it's beaten down, but come on, Facebook alone brings in an incredible amount of revenue to this company. I will say that they created their own problem when they punished their users, but hopefully someone will get into their senses over Facebook jail and stop doing it. Earnings season is here. Pick your favorite stocks and go for it. Just remember to sell your options before the earnings announcement, because that's really what you need to do. Right now, I mean, we got earnings here, and I mean, literally, earnings season started today. We had Walgreens come in hot. So they came out with pretty good earnings, so that's a good thing. I don't understand why the market is still down where it is, or some of these stocks are down where it is. The market makes sense to me, but with some of these stocks don't make any sense to me whatsoever. All right, let's take a quick look at the futures and see what tonight might bring. All right, it looks like we've got the Dow is up just around 300 points. The S&P is up 33, and the NASDAQ is up 80. Oh, I see that one of our trolls has joined us. The blue pill is here. All right, anyway, let's also talk a little bit about crypto and see what crypto's doing. Right now, it looks basically like, crypto's inching down as investors are getting bored. I really think they're totally bored. Bitcoin is below 19,000 again, and Ethereum is about 1,200 again. I don't think these are going anywhere. I think these are a complete waste. Gold and silver. Gold is about 1675. I got to tell you, I think gold is a buy here. Silver is also around 1925. I think silver's a buy too, but I think gold is the better buy for now. So just leave it there for a while. All right, also Treasury bond. The Treasury bond is hovering around 3.9%. Look, so here's what happens. When the Treasury bond, you can see it, when it goes to 4, every time it goes to 4, the market goes down. Why? Because the people want to put their money safe in safe places, and they feel that they can get at 4%. They might as well get a safe place at 4%. So that's what's happening. But I actually believe that the Treasury bond is going to stay above 4. It'll probably be between 4 and 4.5%, and that's probably where it'll be normally. And that way the market will basically, no longer care about it anymore. And that'll be a good thing when that happens. So let's wait for that to happen. Hopefully that'll happen soon. We got oil. Oil is about $88 a barrel. And look, it may be steadying here. I'm not sure. I don't see it moving much. It's, I've seen it go 87, 90, 87, 90. So it's not that bad right now. But we'll see, because, we do have this election coming up, and other countries do want to punish Biden because they don't like him. And neither does this country. The average gas price is holding at about $3.92. I also want to thank everybody for watching Money Chat Now. We are here live every morning at 7:30 on Facebook, Twitter, LinkedIn, and YouTube. And, of course, you can find repeats of the show on Rumble and Spotify. Yeah, please go to Spotify and like it there, or subscribe there. My name is Larry Steinhouse. I am the host of Money Chat Now. I am the CEO of Investor Schooling. And remember, you can contact me directly at contactlarry.com. That's contactlarry.com. Hopefully, I will see you tonight. Make it a profitable day.